Okay, kids. I'm going to ask Scruff just quickly before I head off. So I'll flick this over. It's quite a good question, actually. It's to you, Philip. So, seen on the strength sheet, pound strong, Aussie weak. And I've also seen as well, and he's seen that as well. So it's good that you're picking these things up. But my question is, if you've seen a daily already move more than the ATR, do you still look at this pair to buy the pound or leave it and look for possible shorts? Right, that's it's kind of a double-edged sword, that. First of all, we'll deal with strength. Strength has nothing to do with bias. Zero. All it's telling you is that particular pair is going to move. And the reason being is because they're far apart, they're going to come into middle or they're going to continue to go out, but there is going to be movement. If they're strong, then they're going to range bound, okay? Or if they're equal, rather, they'll be range bound. So that's the first thing. Never take strength as a bias. It's just movement, all right? So it's a good way to pick a pair out. Now, the next part of it was, if it's gone full ATR relatively quickly, do you leave it or do you look to fade it? Well, one of my rules is very simple. If I don't understand it, I stay out of it. If I don't understand why it's done it full ATR very quickly, I'm more likely just to look at something else because I can't predict it, I can't understand it. If it's a news event and it slams straight through, then I understand why that happened. But if there's no news events and it's just kind of come out the blue, I would genuinely leave it alone. But I certainly wouldn't try and second guess it, because if a market has gone into the ATR relatively quickly, that could be a signal that it's going to be trending today. Now, if I try and fade that and it does trend, then I'm in a world of pain because I'm on the wrong side of the trade. But the other side of it is, if it's hit the ATR, it's hit the outer boundary, and there could be a rotation due. And again, if I try to sort of buy into that market, this is assuming it's going long, by the way, buy into that market, I might actually be buying it at the top of the range. So therefore, again, I'm going to get caught on the wrong side of it, and I need to sort of bear a lot of heat in order to get out of it. So the rule of thumb is always trade what you see, not what you think. But if you don't understand it, stay away from it. Catch you soon.